The decentralized custody token framework pretty much allows anyone to create their own wrapped asset, focusing mostly on Bitcoin, bringing it to Solana.
What's next?
A lot of Solana DeFi protocols realizing that it doesn't make sense to give all of the minting and burning economics to BitGo and Coinbase.
I do think a lot of protocols that essentially were built over the last 3 years are holding some baggage from the previous administration.
Yeah.
In the sense that there was no real clear way to structure a crypto business if you wanted a token. A lot of lawyers, won't mention names, but came up with some sort of structure, and that's like the safe with a token warrant structure. And that structure should not exist anymore.
Like if you have a token, that's the single biggest growth driver in your protocol's lifecycle.
Right.
And it's important that you manage that.
Yeah, I mean, I think we've really tried to do that and think, forward into what the type of token we would want to own, right?
From an investor perspective.
From an investor perspective, right? And when you're aligning the investors, you're aligning the network, you're aligning the users, you're gonna set yourself up for success.
Definitely. Hey everyone, welcome to zrTalks episode 2. I'm the co-founder of Zenrock and zenBTC. My name is Aditya Dave. I'm joined here with my co-founder Jack Krevitt and a very special guest from Drift Foundation, Squid. Welcome, man. Glad to have you.
Good to be here.
I wanted to start a little bit with your background because I've known you for about 6 months or so, but really just how'd you get into crypto and what was the first protocol you used?
So I was an intern at a VC, taking meetings with like a bunch of different companies, obviously learning about these different industries. And then there was one meeting with some early DeFi protocol, forgot the name, but the founder showed up like in a tank top and started vaping on the call. It's like, okay, got my attention. But then like started messing around, and the first protocol I like remember using was, I don't know if y'all remember Ohm and Invictus. And made some money on that. It's like, okay, this is sick. Like, this is the future of finance. Then everything went to zero. But I think what it taught, like, it's just like a speed run of like all these different mechanisms, learning about markets. And I think the markets are still quite inefficient, so there's a lot of opportunity. Don't know how directly that answered your question, but
that's right. Jack, what about you?
There.
I don't think I even know this answer, especially as co-founders.
I think I was just thinking about it. I think the first had to have been just Uniswap, just being like, okay, I see what's going on here and trying to kind of test it out, and like this is the first place to start, just kind of swapping one thing for another. No idea why or what I'm trying to achieve, but just swapping. Probably bought some STETH just because I thought I was a genius, like, oh, I'll get 4% yield, like I've solved finance. But yeah, I mean, from there, just kind of messing around with everything, right? I think that's the absolute best way to learn in crypto.
You have to do that.
You have to be on chain, right?
You have to be on chain. I mean, so many people come to me and ask me, okay, how do I learn about the on-chain ecosystem and DeFi? You can look into YouTube videos, read white papers, and scroll through Twitter, but ultimately, how you're going to learn is by doing. And that's really with everything in life. At the end of the day, you got to make mistakes. You got to taste it a little bit, download the wallets, go into some sort of vault, swap, etc. And that's the only way you're going to learn how this works. Mine was also Uniswap, by the way, in 2019, 2020 actually. And then I went into Discords, and this was like the NFT boom, and started like going into these little forums, got sent ETH to get pre-sales of this random NFT, totally got wrong. and then honestly, like I started really being early in Solana's DeFi ecosystem, especially with like, I'm not sure if you remember, but there was a Masoliano Bros that was like 7 protocols, but 2 founders, 2 devs, and was playing around with Saber back in the day. And then obviously from there, it was early in Jito and kind of just made my rounds through Solana DeFi.
Airdrop season?
Airdrop season. I mean, that's probably the only time that I think only time, maybe a couple more in the future, where you can get airdropped like a Honda Civic, and it would be really nice.
Yeah.
But that's awesome to hear. But what led you to join Drift? And I think for our audience, it would be helpful maybe if you described a little bit what Drift is.
Yeah, so Drift is a perpetual futures exchange. I'm assuming I won't go into what perps are, Beyond that, we are sort of becoming an all-in-one DeFi platform. So what I mean by that is there's multiple core primitives in DeFi, like there's swap, like borrow lend, and then perpetuals. We offer all of those. And then because of that, and since all of these work together, you can then build other DeFi products on top of that, like some like structured vault products, or even like mobile interfaces for exchanges on top of Drift, because Drift is all open source.
Right.
So sort of this like one place for everything DeFi. And then how did I join Drift? I've worked at a couple DeFi places before Drift. One was called, actually, I won't say that name. It was an ETH protocol, like junior BD intern. And then it was also an intern at MarginFi.
Nice.
And then ultimately joined Drift because the people. Like one thing you learn about crypto is like it's very trustless. Like contracts, stuff like that aren't very enforceable. You really have to trust the people, and the people at Drift are both very sharp, but also like good people, good reputation. And I think that matters a lot, especially for people looking to get into the industry.
Yeah, I think that's right. I mean, I think especially in Solana, like you're seeing kind of the beginning of people really wanting to work with actual people and not just being like, okay, this is the tech. But it's like, look, to build the future that we want, it becomes limiting when every single aspect of everything has to be completely trustless, and you have to assume everyone's malicious and out to get you at all times. And of course, we don't operate in traditional finance like that at all, right? Ever. And so, I think that just being a real person and wanting to actually go to events and meet people and learn from other people in Solana has been something that's been huge for us.
Absolutely. I mean, it's so true. When we originally started and conceived the idea for zenBTC, it was August of 2024 when WBTC and Big Global kind of had their JV, and now Justin Sun holds a piece of the private key as it relates to WBTC. And we were sitting on this core custody technology using MPC, and we were decentralizing it over time. What that means is that we have 8 institutional operators that all hold a shard of the private key as it relates to zenBTC. And we were coming out there and really deciding where we wanted this asset to live, right, in terms of a layer 1 blockchain. And I can't tell you the amount of times I spoke to OG Ethereum applications, and it was very difficult just from the original call to even talk about any sort of integration. They were like, you have to go through governance, you have to talk to this person, but if that person doesn't respond, you have to talk to this person, and then your governance proposal will get even accepted into the forum.
They'll look at it. They'll look at it.
They'll look at it. Not even approved. And then the contrast on the flip side to talking to Solana DeFi protocols, it was such an easy conversation. Obviously, Solana generally, all DeFi protocols want larger assets, want larger TAM assets, I would call them, with higher volume, higher liquidity on their protocol. But also just from like a relationship and connection perspective, it was very easy to have like a conversation outside of potential asset integration. Even just talking about general things that are happening in the Solana ecosystem and what they need help with, what they can help us with outside of just, a simple integration. So I thought that was really helpful, especially for an early stage project like Zenrock and zenBTC, just to advance the conversations, and night and day between Ethereum and Solana. I'm sure you see that all the time.
Yeah, very bearish bureaucracy.
Facts,
and like that's like what Ethereum DAOs are. And in contrast, like you said, like Solana is very commercial, very focused on growth and like ecosystem alignment, which is valuable.
Definitely.
Right. Yeah, I mean, we were just at Permissionless. It was Permissionless this week in Brooklyn. Shout out to Blockworks team. I mean, I thought it was a great event, despite the fact that it was 1,000 degrees outside this week. But, I'm listening to this panel, and I'm like blown away that we're still talking about scaling Ethereum in the middle of 2025. I'm like, I feel like I'm going to be 90 years old, and we're still going to be talking about the best way to scale Ethereum. And contrast those sort of conversations with like the conversation you're having at Solana Accelerate, right? Where it's all just product. It's how are we going to reach users? How are we going to onboard more people?
Right.
How are we going to make the user experience easier? How are we going to make it better in all sorts of different ways. And it's just night and day.
Definitely. I completely agree. One thing I think you said and honed in on a little bit when you were talking about Drift was this open source nature and decentralization kind of at the forefront. But as we've seen over the past year and a half, as it relates to perps, Hyperliquid has obviously gained a lot of market share, right? And they run an entirely closed, centralized book, right? Pretty much. How would you kind of outline the trade-offs between the two? I think between Drift and Hyperliquid, it's like two opposite sides of the spectrum. But what are the trade-offs?
Yeah, I think on decentralization, I'm not a huge decentralization maxi. I think the benchmark there is decentralized enough.
Mm-hmm.
And what does that look like? Well, the market will decide that. I think the market has spoken and they've decided Hyperliquid is decentralized enough. More what I was trying to get into there is composability and ecosystem, so that it's trustless. Okay, we build this product, anyone else can plug into that. Doesn't necessarily mean it has to be decentralized. A sufficient level of decentralization helps support that. So then the trade-off between something like Drift and Hyperliquid is Hyperliquid has this very performant product on their own blockchain. What Drift is building, also a very performant product, except on Solana. And the advantage we're leaning into is the network effect of that Solana ecosystem.
Right.
That other people building apps can then quickly plug into us. They can build an app using maybe Drift and then also Camino. And then more importantly, and I think really the advantage is, since there's so many users, so many apps, this is where assets are going to be issued. And in DeFi, asset issuance is huge. One that was super exciting was Republic's SpaceX thing.
Yeah.
I'm not sure, it'll probably take a while before that's integrated into DeFi.
Yeah.
But it's this is where these next gen assets are coming. And that's where I guess the next generation of DeFi will be built where the assets are.
I think that's
the bet.
It's definitely right. And I think Drift specifically has positioned itself as a little bit more of a super app within DeFi. It's not just perps, right? And we're obviously going to be working with you with zenBTC on the lending product, but you have an institutional arm as it relates to Apollo and Acred as well. So I completely agree with you in terms of asset issuance. It's very important in terms of validity network effects, especially on the institutional side, and for larger TAM assets as well. And I haven't really seen Hyperliquid in terms of their L1 really lean into that narrative. It really has been a lot of meme coins, frankly, and I think that's where people are flocking to, because the majority of their user base is traders, right? And people that gamble, which is fine. I mean, casinos are incredible, and crypto is the most optimized global casino. It's highly efficient. But as we scale up into more of a mature industry, protocols that are leaning into this narrative like Drift and Drift Foundation is very important.
Yeah. I want to even highlight something that you said, and it's something that we've been thinking about too with our DCT, decentralized custody token framework. This idea of
what is that?
Glad you asked. The decentralized custody token framework pretty much allows anyone to create their own wrapped asset, focusing mostly on Bitcoin, bringing it to Solana.
What's next?
What's next is really a lot of Solana DeFi protocols realizing that it doesn't make sense to give all of the minting and burning economics to BitGo and Coinbase, right? And it makes a lot more sense for them to create their own wrapped asset and own the economics through our economic sharing by being a liquidity provider on Zenrock's DCT standard. And I think that is kind of really cool and gets at something that you were talking about, right? Because I think one of the strongest thing, maybe the most powerful thing that you can do in crypto is when other companies are raising TVL and raising volume for you. Because they're raising TVL for themselves, but that is your TVL too, right? The perfect example of this is, the DCTs, right? Because all of a sudden we have another company building some sort of wrapped Bitcoin product, and that is TVL building for us, but they're out working it all day, right? So I guess kind of going back to some of the stuff that you were talking about in terms of people building on top of this generalized like super app, like do you give any like good examples of that, or kind of the way that's kind of maturing right now in the ecosystem?
Ecosystem, yeah. I mean, the first ones that come to mind are obviously on Drift.
Yeah.
Like Vault's ecosystem. There's teams that have built like their own companies that manage these vaults and strategies fully on top of Drift. One would be Neutral Trade.
Yeah.
Doing very well there.
Yeah,
and
they're
all
great,
that
great
TVL
team.
volume flows to us. Others are things like Lulo, Carrot, like these yield aggregators, consumer-facing products that uses Drift backend along with a number of other DeFi protocols. Interesting one I want to highlight is like Pyra. They're building a credit card that is like, you can use Bitcoin to buy anything, constantly yield bearing. Again, that's also built on top of Drift. So we provide this infrastructure which allows companies to build faster, but then ultimately it's very synergistic because that TVL volume contributes to the broader Drift product, which then in turn helps it grow. So it's a very synergistic loop. But yeah, top of mind ones, obviously Drift. Nothing.
No, for sure.
Yeah,
I mean, and that is really building the network effect, right? And each new company that comes in and is building their own module, whatever it may be, is potentially providing value to all the other companies that are doing that too. And you just get this runaway network effect that is so powerful in the space. I mean, we've seen time and time again.
Definitely. One kind of switch I want to make a little bit as we talk about protocols, liquidity network effects broadly, is this topic of discussion that I think has been at the forefront of the industry. It's really value accrual to the token versus equity. And we've spent a lot of time on this at Zenrock and have focused from day one to embed value accrual to the ROC token via a deflationary burn mechanism. But I know Drift has been doing a lot of work on that front, especially as it relates to buybacks as well. So we'd love your thoughts on kind of how you see this evolving over the next like 12 months and how protocols like Zenrock and zenBTC could really act as like a thought leader in the space, being new and being very malleable and flexible in terms of structure.
Yeah, I think this is a really tricky area because, like, you're right, tokens are not equity, but then like too aggressive value accrual is also like inefficient use of capital.
Right.
So you have to really balance that out. Right now, there's a lot of hype around, I want buybacks to the token. Well, if your token's trading at like a 40x PE, however you define that,
right,
you're pricing in a ton of growth. And if you're sending all that revenue back to the token instead of using it to grow, like you're never going to achieve that. And it's just not a recipe for success.
It's the same way how like equity companies in the TradFi world give out dividends, right? In essence. And I worked with some smaller, medium-sized businesses in my previous roles, and they had like a small group of investors. They were making a decent amount of net income, and they gave out money back to their investors and just gave them dividends. But the trade-off was that if you really want to grow this business and make it, a multi-billion-dollar business in the next 10 years, you don't necessarily need to give out that many dividends, because 10 years from now, those dividends could be 10x what you're giving out now, right? It's the same kind of aspect, because you want to hold some money in the Labs Co. to incentivize not only developers via a nice salary, but also grow the business via marketing, etc., whatever you would do with it. So keeping a portion of it, I think, is still very important. 100% of revenue distributed back to the token just doesn't necessarily make a lot of sense.
Yeah. Also, I think I do think token alignment is important. Like, if you have a token, that's the probably single biggest growth driver in your company's or protocol's lifecycle.
Right.
And it's important that you manage that. So even if you're not like directly distributing, some form of token alignment and attention to the token, I think, is important for all DAOs. Our approach to that is recently governance passed a smart buyback proposal, which is we're buying back tokens, but then those can be used at a future date to encourage more growth. And if those tokens are used in like an incentive campaign that's in a capital efficient manner, it's like plus EV while still aligning with token. There's a bunch of ways to do this, but it's important to consider. I'd actually be curious, what are y'all's thoughts on Zenrock token and how that aligns with the DAO and protocol?
Yeah, I mean, I think the point is very interesting and correct that it's definitely not efficient to just take every fee and every reward that comes in and just immediately like use it to just burn tokens, right? That's not the best way to grow the ecosystem. But I also think that that crypto users and investors as a whole are kind of sick of this fee switch, trust us, bro model, right? So we try to find kind of the middle ground where we have like a tokenomic split where when fees come in that we earn through minting and burning of zenBTC and all DCTs, that 10% gets burned, right? Another 30% is used as essentially a foundation growth fund, which can be used for a variety of purposes, all that are going to kind of grow the Zenrock ecosystem and potentially be used for all sorts of variety of purposes, kind of similar to the way that you described on your side. And then we have 30%, which is going to pretty much the tokenomic flow. Since we have zrChain, our own blockchain, we need to kind of pay validators and MPC operators to make sure that we have everything functioning properly. And then the last 30% goes to like the TVL providers. Pretty much whoever is providing the TVL for a particular DCT gets that fee. In the case of zenBTC, we take that, turn it around, and give that all out as yield back to zenBTC holders. But in the future, if someone else, is creating their own DCT, that's totally at their discretion of what they do with it. So, for example, they could give it as yield. They could keep it for their labs co and maybe use it to grow their ecosystem. They could also give it to their governance token. Maybe they are some sort of a DeFi protocol that needs a wrap Bitcoin and wants to use their own to own more of the economics and say, okay, we're going to give this as to create a buyback and burn or a buyback and use for effective purposes for their governance token or any other thing in between. And I think one thing that's been important to us when we think about our architecture is giving people that flexibility because I think none of us know what the best use is and the best ratios are, right? I think in 15, 20 years, we're going to be in a situation where probably every new protocol that launches does it the same way because it just like becomes a way that everyone's like, this is the best way, right? Right now, everyone's trying different stuff. And I think, to the point you made earlier, right? The ability to be a thought leader is really interesting to us and, the ability to drive the industry forward and kind of move it in a way that we think makes sense is kind of really exciting.
Definitely. And I do think a lot of protocols that essentially were built over the last 3 years are holding some baggage from the previous administration. Yeah. In the sense that there was no real clear way to structure a crypto business if you wanted a token. And a lot of lawyers, won't mention names, but came up with some sort of structure, and that's like the safe with a token warrant structure. And that structure should not exist anymore, especially with this new administration. That creates a bifurcated structure because there's both equity and tokens that exist within a company. And from the start, when you raise your initial funding round, if you start with a safe with a token warrant structure, you're instantly the value accrual is bifurcated. And now you have to work backwards with investors, with your employees, with given stakeholders in order to create a structure where there's one alignment in terms of value accrual. And it's either equity, it's either tokens. I personally don't think that there should be both. It doesn't really make sense. All value should accrue to one structure, one entity only, and everyone should be aligned on that one entity structure. Alignment across all different stakeholders is very important. I do think being transparent and upfront with what the business or protocol is currently structured as is very important as well. And Blockworks also put out this really nice token transparency report that I think all protocols should just fill out for their own sake to understand, oh my God, like we actually are not operating in the most transparent way, and things are still quite opaque. And maybe it will be a good realization for themselves too. We did it at Zenrock, and we were like, okay, there's some things that we could definitely fix, but there's some things that are positives as well. And we're going to publish it hopefully in the next, coming weeks, month or so. But that being said, I think it's very important. And this is only possible with the new administration.
Right.
Only 6 months ago. So of course, as things come on, right, and evolve in terms of legislation, guidances, and regulatory structures, it will be better. But there's definitely an opportunity for protocols out there that have existed in more opaque guidance structures before to come out and provide some transparency, similar to what Morpho has just done with putting labs underneath the foundation and really aligning all the economics and incentives via the Morpho token, which I personally really appreciated operating in this space for the last 5 years.
Yeah, I think what Blockworks did is really exciting. We haven't actually taken the time to look into that and do that. It's definitely on the to-do list. I think the other thing is there's a lot of path dependence. The industry is the way it is because of these regulatory headwinds, but because of that, there's also this standard and that people are used to. And for that to change, and for people to really adopt a standard like the Blockworks thing, I think a lot of it will be market driven.
Yeah.
Which people taking the time to be okay, yeah, if you have this standard filled out, you're transparent, we're going to give you a premium. As soon as that starts happening, yeah, I think the industry starts to get figured out. But then I guess on that is probably what needs to happen is we need more institutional capital and sophisticated investors really driving markets, which I don't think we've seen yet. Because, I don't think retail is taking the time to read transparency report.
Yeah, I agree with that.
Yeah, I think I completely agree. And I think that we have lived for so long in this world of how can we make the best solution that also make sure that we're not going to end up in some sort of petty lawsuit for the next 100 years, right? Paying millions of dollars in legal fees. And that's created all these kind of strange structures, which I think has also kind of hurt the industry a lot in terms of people being like, hey, I kind of liked crypto, but then I started to invest in it and I realized I was buying a token, but all the value is flowing to this equity and it's feels scammy. And the sad part is that feels scammy. And the people who were doing it were like, we agree. We didn't want to do it this way. This was forced on us.
Yeah.
And I think that this is a moment in the industry to say, okay, let's think about the way this actually just should work, right? When we look at the industry in the next 50 years in the future, how is this going to look, right? And how can we start to drive that forward? I think we've really tried to do that and think, forward into what the type of token we would want to own. Right?
From an investor perspective.
From an investor perspective, right? And when you're aligning the investors, you're aligning the network, you're aligning the users, you're gonna set yourself up for success.
Definitely. All tokens aren't created equal. I think it was just today actually, Diego from Frictionless actually said this, where you have tokens that are distributing 5%, 0%, 50%, 25% back to the token and doing some, nuanced things in terms of value accrual, buybacks, and burns, but being transparent and open with it is very important. But as it relates to that, I think there's been a lot of discussions around airdrops and how tokens could be used as incentive mechanisms, especially for protocols like Drift and for asset issuers like zenBTC. But would love to get your thoughts on how you think moving forward, especially with token transparency coming to the forefront, how airdrops are going to be used as incentive mechanisms to bring liquidity into a project.
Yeah, on that, I think there's two different things. The first is initial airdrops and ICO. I think actually a lack of transparency is probably good there because it allows people to speculate on what these numbers will be. What's the percentage, how are they ICOing, when? To some degree, lack of transparency is good because people usually overvalue those implied incentives. But then in terms of post-airdrop incentives, industry standard, everyone does it. Part of the reason you have a token, the one thing is I think there just needs to be a higher bar for capital efficiency. When looking at growth and how you're spending these incentives. Ultimately, that issuance and selling that on the market is a cost to the protocol. So if you are spending like, although yeah, it's like in the treasury, $1 million in incentives, and it drives 500K in revenue to the DAO, like that's inefficient. You shouldn't be doing that.
Right.
Same with grants, same with like marketing budget, anything there, you really have to think of it as a cost. And that's just something historically, and even today, a lot of protocols aren't doing.
Right.
So yeah, I guess that's the main thing.
I think that's right. And I think we need to move away from a lot of like excess farming that doesn't necessarily relate to growing the protocol in terms of liquidity. And there's so many like quest programs out there that people still do that I've done in the past as well. I'm not gonna lie.
Get that bag.
Yeah,
Follow this X account and get 5 points that are gonna equal to like 50
1
cents.
cent. Yeah.
We need to move away from that, I think. And what we actually just launched this week was called the Rock X Genius program. And what this is a way to incentivize creativity, people that are articulating our vision, any ideas that are written in the form of threads or X posts, Twitter posts for Zenrock. And if we like it, and Jack and I are like kind of the arbiters or the judges here, if we like it, we'll send you 1,000 Rock. And that's a new way of kind of increasing network effects via Twitter, instead of just like following a random account and plugging in your Matrix and Discord and connecting your wallet, and now you're deemed worthy for an airdrop. No, we want more creative ideas coming to the forefront, people talking about Zenrock, Rock tokens, zenBTC, the DCT standard. And if we like it, we'll reward you instantly. And we'll put up the soul scan, we'll DM you, ask you for your address, and we'll do it instantly within, if we like it, within an hour. And I think that's a new way of kind of increasing network effects and distributing Rock too. And we view that as a cost. That's coming from our airdrop bucket within our tokenomics allocation. I think that's something that's new. Maybe some other protocols could adopt that structure, because I personally even write threads of protocols that I find are very interesting and go into some details about it. But if I was like rewarded just because I thought it was they thought it was interesting and creative, I do that all the time, and that's a way to actually make some money, and that's real, right? Instead of this old way of airdrop farming.
Yeah, I think you have to just know in this space, anything that can be farmed will be farmed. Like anything, right? If you say do this, this, and this, and you'll make this much money, people are gonna just create as many wallets as they can and just do it, right? So that's why it's like
bridges that have all the cross-chain bridges when they didn't have a token. Right?
Exactly. People were just spamming back and forth all day.
Swap and ETH to ARB to ETH.
Yeah.
Like 100 times a day.
And so, yeah, I mean, with our Genius program, we're really excited about it. We've already seen some great engagement. It's not about, just write the word Zenrock in a tweet and and do that as many times as you can, right? It's like has to be high quality content. And I think that, to your point, everyone should really consider this sort of a model, right? Like, we want to reward high quality content in our ecosystem. That's when you think about like the ecosystem and kind of the community we want to build. It's not bot farmers. It's people talking about it and be like, hey, I really like this project and here's why, and let me explain it to you, right? So I think that's really cool, and the way of thinking that a lot of projects should kind of start to consider more and more.
I think something on that. First of all, love this idea. Like, I think one thing is organic is really important, because I think when looking at how do you justify the cost of this spend, a lot of it is you're not going to spend it and then get more money right away.
Right.
I mean, you guys used to be growth equity guys. It's like LTV to CAC. That's the goal. And if it's mercenary capital, that math is never going to work out. 100%. So you really have to find ways to encourage this organic growth, which, I actually really like this idea, and I'm going to suggest it to our marketing team.
Yeah.
Do something similar.
Yeah.
Sweet.
Reward the people who are real.
Yeah, exactly. Real organic content. And there's incentive there. I think that's something new. Also, we've seen over the past, really 3 years, a lot of protocols that are incentivizing deposits via points or an airdrop, their token has gotten plummeled, like destroyed, right? So how we've been thinking about this, like how can we manage growing our community, growing zenBTC TVL, growing DCTs while still maintaining, a solid chart and not overspending on incentives? I'm curious how you guys have thought of that, especially as it relates to like the fuel program that has been going on for the last 2 years too.
Yeah, I mean, it's a tricky question because part of it is like the market, like competitive landscape is like a lot of protocols do overspend on incentives.
Yeah.
So if you're not overspending, it's like you're at a competitive disadvantage. But it's really the key of it is encouraging and distributing incentives to real users who are going to be like long-term users and that and will actually like help the protocol ecosystem overall. Again, because it's like you need that, mercenary capital. If you incentivize that, it's very negative EV. Something we did with fuel is like when our fuel program shut off, like sure, volume went down a little bit, but there was still a very strong baseline with good liquidity, which showed like, okay, maybe there's some mercenary capital as there always is, but at its core level, there's still these like core behaviors we're trying to encourage and like core ecosystem we're trying to support. For y'all, I'm not sure what that looks like, but I think the main thing is like, avoid mercenary capital.
Yeah, definitely.
Yeah.
How does that? Yeah, how are y'all thinking about that?
We're just starting to incentivize like very small numbers, I would say. It's kind of on the mission of under promising and over delivering, especially as it relates to distribution of ROC tokens. We are going through a pretty intensive incentive campaign on Camino, which maybe by the time this podcast launches is fully out and launched. That's a 3-month program focused on our 3 main pools, which is zenBTC, CBBTC, zenBTC USDG, and zenBTC Jito Sol, all living on Orca, which shout out to Orca. I think they've been a great team in terms of help and pool creation. But we will be distributing ROC tokens as well as a myriad of different co-incentives with our partners. But that's still not a large amount, right? We plan after that 3-month program is done to assess, take a step back, and see how we can, depending on what the market demand is, see how we can increase or even decrease some of those emissions in terms of incentives. But I don't think it should be like 5% of the tokens supply, right? I think it should be much less than that, and it doesn't need to have like a massive uptrend instantly, right? It can grow slowly. We'll get our real early supporters that aren't mercenaries, that like to hold and want to hold zenBTC as an asset. They want to stake it and are sophisticated enough to potentially use it as collateral. And those are the real early users that we're trying to target with this incentive campaign. Get some ROC in their wallet, get a little taste of it, and start using zenBTC as an asset across Solana DeFi. From there, we'll see how it kind of grows and evolves. But I think it's very important for early projects not to distribute, a larger percentage of their fixed supply as emissions incentives or an airdrop. It's detrimental to your success. And if you have the liberty to do so, think in the long term, not in the short term, not in 6 months, think in 6 years instead. And I think that will be very helpful in terms of distributing your token, because what you could do on the offhand, and we've probably seen this time and time again over the past year, is that a lot of tokens have gotten dumped, and then all of a sudden the team issues a new token. And that token is starting to see a lot of traction, and people tend to forget. And their attention span in crypto is very small. They're very fickle people. I even, as a DeFi user, if something comes up, I don't pay attention to it after another, week even. So that's another strategy you could potentially do. But if you're in it for the long run and hone in on this mission of under-promising and over-delivering, I think it's a recipe for success broadly, especially as it relates to emissions.
Yeah, I think one other piece of it is something that you mentioned earlier about how in certain situations, giving less information out can actually be a major advantage. And so, for example, if we say, okay, minting this amount of zenBTC gives you this many points, which then translates to this percentage of the airdrop, and the price is this, well, then a farmer can calculate exactly like how many times they should just mint redeem just to farm it, right? And just calculate like exactly what makes sense for them to do. Whereas if we're just like, hey, which is kind of the approach we're trying to take more now, is like, hey, we're going to, in our future airdrops, we're going to incentivize on-chain activity. We want people to use the protocol. We're not necessarily going to show exactly how it all is going to go. It's more about use the protocol. Those who use the protocol will receive airdrop, and that's just the way it's going to be. Then we kind of get more to a place where it weeds out a lot of those extremely mercenary, extremely sophisticated farmers, and you're left with actual users. And I think strategies like that can be really effective to weed out those that you don't want to see.
Yeah, completely agreed. I'm aligned there for sure. So moving into like the next like 12 to 24 months, how do you foresee Solana DeFi really expanding as it relates to institutional and more liquid funds operating on chain? And what do you think are really the steps for that?
In terms of institutional, I think like all the groundwork is there. That's just going to be a slow process. Like we're seeing interest, we're seeing people start to do stuff. Just everything in that world moves a lot slower. So I think that will just naturally come as long as like the Solana DeFi ecosystem remains strong, which have confidence it will. Liquid funds, I think that's a different question. And I think the main one is like there needs to be a token ecosystem where there's like quality revenue generating tokens, and that's like the norm, not the exception.
Yeah.
Even stuff like there's some of these big projects that if they just get like acquired or they IPO, because if they're a quality team, like they're gonna see a premium IPOing. Like I think Circle would be trading a lot less if it just had a token.
Yeah,
which is
right.
like
That's right.
crazy. But
Markets
like,
are very irrational.
If that's where all the quality projects are going, like there's no reason for like liquid funds investing in tokens to raise a ton of money to invest in these quality projects, because there really just isn't that much to invest in.
Right. Right. I think there are like 20 tokens that are deemed worthy enough in terms of value accrual and revenue that liquid funds would even like buy. It's 20. That's it. Yeah. And that's not including any L1s. Those are real like applications. Only 20. Maybe it might be less than that, honestly.
Even then, like, yeah, a lot of the revenue's like very incentive driven, very like cyclical.
Yes.
Stuff like DeFi, like moats have been like, there's no precedent for like, or very limited precedent for DeFi protocols that like are robust. Right. So yeah, it's I think there isn't a lot of liquid funds. Like liquid funds don't define price right now just because there's not enough interesting stuff to deploy into. So there's not a reason for that much capital to be in the ecosystem. I don't know how you change that, but I guess building quality projects with quality tokens. So
yeah, zenBTC and Rock. Maybe take a step back, and I want to, obviously I'm a co-founder, but maybe hear from my other co-founder of how Rock and zenBTC tie together.
Yeah, this is something that we always like to talk about because, especially for those who are a little less crypto native, it's quite challenging. But it's just important to remember that zenBTC is the product, right? That is our way of bringing Bitcoin to Solana. We think that bringing Bitcoin to Solana is extremely important because we need to be able to use Bitcoin in DeFi, right? Think about all the incredible applications that you guys are building at Drift. We need Bitcoin to be there and be usable in all of these use cases, and it's just not usable on the Bitcoin blockchain. So when we move Bitcoin from the Bitcoin blockchain to zenBTC on Solana, there are fees generated on ZR chain. That's its own network that's solely dedicated to custody. And the Rock token has many functions within the ZR chain ecosystem, but effectively it's also the ownership of the network, right? It controls governance, it controls kind of the security of the network, and it controls kind of the future of the network, and then it also earns the economics of the network in the ways that we've described throughout all of our documentation. So that's an incredibly important link to understand. And I think there's a lot of projects who are doing similar things, right? It's like you may have a good example is like Jito, right? Like Jito sold the product and then JTO, the kind of ownership of that network. It's a similar kind of dynamic. And yeah, that's how I would kind of describe that.
I actually think it's a very important point. Moving forward, and I think honestly Hyperliquid did a really good job of this, is start with an application that you can really build your core user base, build early liquidity, and build network effects, and then move towards more of an operability narrative, whether it's an L1, whether it's a core custody infrastructure like the DCT standard, whether it's building a super app in DeFi alongside many different primitives. But really launching an app first helps get away from the build it and they will come narrative that I think too many crypto projects have moved first towards in terms of narrative. And like, hey, like we have this great infrastructure, we have all these libraries, we have a great open source GitHub repo, and just come and build. But that doesn't work anymore. No. You have to really scale up, prove out your current infrastructure first, and do it in ways that are via an application. Yeah. I think Drift has done a really good job of that in terms of first launching a perps protocol, and then moving towards more of like outside primitives, whether it's lending, prediction markets, etc., vaults, and on-chain asset management, right? But your core product is still the perps protocol, and you've been able to generate a core user base off of that.
Yeah, I think it's less relevant for like application first, like Drift, but for infra stuff, 100% Definitely agree. Infra, like, yeah. If you're building some niche infra, build it and they will come. Like
you're done. You're done.
It just cannot work. You're building the business off of hope, and anything based on hope, doesn't end up working out.
Hope and VC money.
Yeah, exactly.
Exactly.
But right, I mean, and sometimes so many projects fall into this kind of pitfall, in my opinion, of, oh, we've built infrastructure that's so good that it could do anything. It's like, okay, well, if you can do anything, then you kind of are not doing anything, right? Yeah. Especially in this space of you have so many incredible teams that are like laser focused on a use case or kind of a certain a sector of the market that now all of a sudden you're like, oh, we're generalized. You can build whatever you want here. It's like, okay, cool. Thanks. Like, yeah, I don't know that I'm going to build anything, but I could. And I think that is the problem that we're seeing. Kind of, again, I think the Solana ethos of not having that approach is so different. And so much better. I guess one question like I have is, what would you say is maybe one or two either use case or module within your Drift ecosystem that maybe not getting as much press as it should, or is kind of like underhyped that you think, if we were doing this podcast in 6 months, 9 months, that we'd be talking about a lot more?
I think in terms of what's underhyped is there's a order mechanism called Swift we use, which is like a more Solana aligned way to to attract orders using like a JIT mechanism. And like right now what that looks like to the user is they flip a switch, don't pay gas, it's quicker, cheaper fees. So it's almost like a feature, but really the infra there is really compelling, and you can actually expand that to do more stuff. So I think talking about Drift 6 months from now, it will be some of the things we're building out for, I guess, our V3 or next version, and really showcasing like how it's a differentiated team, but showcasing and showing these capabilities in a way that is still fully aligned with the L1 built on Solana.
Right.
Really cool.
Which I think is really important.
Yeah, infrastructure as a feature. It's literally the exact opposite of like generalized infra and build it and they will come. It's like infrastructure that is to the user just a feature and an improvement on the UX, right? I mean,
Practically used.
Yeah.
Well, Squid, this was awesome. Really, thanks for coming in. Look out for zenBTC on Drift, hopefully in the next coming months on the vault side and the lending side. Really excited to be working with you, and thanks so much for joining. Just to end it, nothing we say here is financial advice, NFA, but thanks so much.
Awesome. Thank y'all.
Thanks.